Hello ladies and gentlemen, welcome to my channel. My name is George Kingori and I'm going to ask you the simple question. Are you a poor landlord or a rich tenant? And when I talk about rich and poor, I mean cash flow rich versus cash flow poor. Many people that I have met have invested so much in real estate, in land and in commercial enterprises, and they do not have cash. They have a lot of worth in terms of net worth, a lot of wealth in terms of assets, but they do not have the cash flow that is required to be able to fuel their expenses, to fuel their lifestyle, to be able to help them survive. This is because you may have a big house, but you may not have food to eat. You may have a big house, but may not have the cash to pay for your medical expenses. And this is where I talk about poverty as a landlord versus richness as a tenant. The thing is, these properties and real estate take in a lot of capital, and sometimes we have gotten into that trap of wanting to invest and having a lot of physically available assets that you can actually touch. We are all in the same temptation where we want to have investments in assets that we can be able to touch, and we end up putting all our cash resources towards these investments. These investments may not directly translate to cash every single month. They may be generating value, they may be getting capital gains, but they may not have the monthly income that is needed to be able to see you pay for your expenses, especially in retirement. And this is where people talk about landlords who live a very modest life, live a life that seems a bit like a poor kind of life, while the people that they have rented out their house to seem to be living a larger than life kind of lifestyle. They have a lot of money, but yet they are collecting rent, but still seem to be a poor or languishing in poverty. This is because of cash flow. Then the other thing is, sometimes we feel the need to have a bigger or an exceptionally big house, and this is where, for the people who have not actually invested in rental property, they want to acquire a big house. Sometimes a big financial loss, a big financial mistake, that people have taken all the money that they could otherwise take towards the investment to be able to generate income on a monthly basis. Sometimes it is even sad when people enter into retirement, they buy a house or build a house in their retirement, taking away all the money that they have been collecting over the years. And since they are going into retirement, they no longer have additional cash flow. Since they have put all their money in this house, they do not have additional cash flow, and still, because they stopped working, they can no longer generate the cash flow that is needed. Ensure that you do not fall into this trap where you build a big house, especially when you're nearing towards retirement or in retirement, and end up being cash strapped. Because remember, when you are hungry, you cannot really take a roof and convert it into food at that particular time. The other thing that people forget is that sometimes these real estate investments and this big house requires a lot of additional maintenance costs. Something is bound to go bad, something is bound to go terrible, something is bound to break. In a big house, the chances of something breaking every single month are great. And all these are financed by cash that you need to inject every single time. Every single time. Tiles are breaking this month, the windows are broken that month, the taps are leaking this other month. So this cash flow is needed to maintain this big house. And especially for the people who have investments in a big personal home and a big personal house in big chunks of land, but do not have cash flow that is corresponding to this investment, and they end up being cash strapped. Have you ever looked at advertisements where they say that the owner is selling this property at a giveaway price because they are in need of cash now? It is a distress sale. When it comes to distress sale, it is because most of the time the person who is selling has a lot of assets value in terms of assets, but they are not generating the cash flow that is needed to be able to meet an urgent need: food, shelter, clothing, medical expenses, school fees for their children. Distress sale are because people are cash flow poor. Then the other thing is, people are not looking into cash flow ready investments. People are not looking into investments that are actually bringing in cash. This is because majority of people are not even financially disciplined to handle cash, and especially when they are getting this money as passive income. And so many desire to have the investments of their money in tied up assets and investment. It is good if you need the financial discipline, but it is bad if you need the cash flow in the future. So ensure that you have a balanced approach, and I always encourage people to have a balanced approach that will ensure that yes, you have the cash, but you do not have too much cash that can make you overspend or do a big financial mistake, because sometimes cash can actually cheat you. I've met several entrepreneurs who see a lot of cash in their bank accounts, see a lot of cash flow within the bank, within their businesses, and they assume that all this money is their money. My friend, in a business, not all money is your money. A certain percentage, 30% or thereabout, goes to the government in terms of taxes. So if you have not paid your taxes, you'll always think that you are rich, but 30% or so is belonging to the government. A certain percentage is belonging to your creditors, people who have given you goods and services on credit. So when you look at the cash flow, you are tempted to think that you are rich, and you may be tempted to continuously invest and have a lot of money in stock and in new buildings and in improving the business, but the cash flow bit is what is biting. How many supermarkets in Kenya have failed, not because they do not have branches, not because they do not have assets, but because they do not have cash flow to start paying for rents, to start paying for employees' salaries, to start paying their creditors. Cash flow poor, big, financially capable, but cash flow poor. The other thing you need to understand is you do not always have to have a physical asset. Sometimes even that house will tie you down. When you need to move, you move to a new country, you move to a new location, what do you do with these physical assets? And remember, physical assets may not be easily convertible to cash. And when you want to convert them quickly, you end up giving a bigger discount. And remember the distress sale that I was talking about. You give out a big discount which may not make financial sense to you. You go at a financial loss simply because you are distressed and you need to move and you need to do something with this particular asset. So have a balance so that you are not too tied, but then again, you are not having too much cash and have the same problem with these supermarkets I'm talking about, where you start making funny investments, you start making advance orders, yet you do not have the cash that you have. It does not belong to you, but to other people outside or within the organization. I hope that you are learning and stop getting trapped in the whole asset acquisition game. Stop thinking that the more you brag about how many acres you own or how many buildings you own makes you a lot wiser. Sometimes it is a cash flow that you have, because these people you want to show how much assets you have may not give you money because they say you have this and this building, you have this and this piece of land, you have this and this investment. But because you do not have cash, you actually struggle to make it. I hope that you are learning, you are growing, and you're becoming better in your financial affairs. Put cash flow as an important consideration to your investments. Remember to subscribe to the channel, to leave a comment down in the comment section, and to like this video.